All right, today we are diving into what could be a massive, massive shift in how you think about investing in crypto. And it all comes from a new thesis by analyst Tom Lee. He's basically saying, hey, that old rule book, throw it out. There's a new, maybe even a smarter way to play this market. So let's get into it and break down this new playbook piece by piece. You know, when a seasoned analyst like Tom Lee drops a quote like that, you got to sit up and pay attention. I mean, that's not something you say lightly. It tells you right away we're about to get into something that could be a real game changer. So what's he so fired up about? Let's find out. Okay, so first things first, let's look at the big picture here. According to Tom Lee, the crypto market that we all thought we understood, well, it's pretty much over. You know those predictable 4-year cycles? The ones everyone has been basing their trades on for years? He's saying they're breaking down. And why? Because the who and the why of crypto investing is changing in a really fundamental way. And you can really see that change right here. I mean, just look at the contrast. The old story, that was easy. It was all of us, right? Retail investors speculating on Bitcoin as this digital gold. But the new story, wow, that is a completely different beast. We're talking about a market that's now being led by giant institutions, even governments. And it's not just speculation anymore. It's being built on real-world uses in things like AI and finance. This isn't just a niche asset anymore. It's becoming a foundational piece of major global industries. The whole game has changed. And look, this isn't just some theory he's floating. Lee points to 3 huge forces that are making this happen as we speak. Number 1, the big institutional money is finally here, for real this time, and that's already starting to calm down some of that legendary crypto volatility. Number 2, the explosion of AI is creating what he calls worker equivalence. Think about that. It's a massive economic shift where AI can do things at a scale that just fundamentally changes the value of labor. And number 3, Wall Street, you guys, has the regulatory green light. They can now really start building on the blockchain. This isn't some 5 years from now prediction. This is happening right now. So the big question is, if the entire market is changing, how are you supposed to invest in it? Well, that question leads us right to the main event of this whole thesis, the crypto treasury company. See, this isn't about just buying a coin anymore. This is about buying into a company whose whole reason for existing is to take the returns of a coin and, well, supercharge them. So what in the world is a crypto treasury company? Let's break it down. It's actually pretty simple. Imagine a regular company, one you can buy stock in. But instead of making widgets or software, its one job, its only job, is to raise money on the stock market and use every single penny to buy and hold a massive portfolio of crypto. That's it. That's the whole business model. But does this model actually work? Well, let's just look at the poster child for this whole idea, MicroStrategy. During one stretch, Bitcoin itself did an incredible 11x. I mean, that's a home run in anyone's book, right? But get this, the stock for MicroStrategy, the Bitcoin treasury company, delivered a jaw-dropping 30 times return to its investors. That just perfectly shows you the power of this model. It can take great returns and just amplify them like crazy. And this quote from Tom Lee, it just nails it. It perfectly captures why what we just saw is so important. When this is done right, you're not just passively tracking an asset. A well-run treasury becomes something else entirely. It's a vehicle to seriously amplify returns. It becomes, like he says, something so much more powerful than just holding the crypto yourself. Okay, if this whole idea still feels a little bit out there, Tom Lee has this brilliant analogy. Think about a giant oil company, right? A huge chunk of its value isn't the oil it pumps and sells today, it's the proven reserves. All that oil they know is sitting in the ground waiting. It's the exact same logic here. The value of a crypto treasury is based on its digital reserves, and crucially, its plan to grow those reserves over time. But, and this is a really big but, the MicroStrategy playbook has a huge risk baked into it. Debt. Lots and lots of debt. So that begs the question, how do you get that insane upside we just saw, but maybe shed some of that risk? Well, that brings us to what Leaf sees as the next evolution of this whole playbook. Okay, this right here is the absolute core of the new thesis. On one side, you've got the debt model, like MicroStrategy. They borrow a ton of money to buy more crypto. That gives them leverage, which is great on the way up, but if the price crashes, their lenders can force them to sell at the absolute worst possible time. That's a margin call. Now, look at the other side, the clean equity model. They raise money by selling new stock, no debt. That means no leverage, which might sound bad, but it also means, and this is the crucial part, there is zero risk of being forced to sell, ever. So, how does this clean model actually work?
It's almost beautiful in its simplicity. It's just 3 steps. Step 1, the company sells new shares of its own stock. Step 2, it takes all that cash and immediately uses it to buy more Ethereum for its treasury. And here's the magic trick, Step 3. Even though there are now more shares out there, they've added so much ETH to the pile that the amount of Ethereum backing each individual share actually goes up. It's kind of counterintuitive, but your slice of the crypto pie actually gets bigger.
Now look, a brilliant company's structure is totally worthless if you bet on the wrong horse, right? The machine is great, but what about the fuel? And that brings us to the fuel for this fire. This entire playbook we've been talking about, it's all built around one specific crypto that Tom Lee thinks is on the verge of an absolutely historic run. So why Ethereum? Of all the cryptos out there, why this one? Well, Lee sees a perfect storm brewing. First, he says it's becoming the foundational layer for what could be a multi-trillion-dollar stablecoin market. Second, Wall Street isn't just experimenting anymore. They are actively choosing Ethereum as the platform to build their next-gen products on. And third, he believes it's going to be the essential plumbing for the entire AI revolution. I mean, that is one heck of a powerful trifecta. And to really wrap your head around just how big his conviction is, we have to look at the numbers. Let's start with Bitcoin. His near-term price target for Bitcoin is $200,000. Now, just stop and think about that. That alone is a massive headline-grabbing call. It sets the baseline for just how bullish he is on this whole space. But if you thought that was a big number, just hold on. His 5-year price target for Ethereum is $60,000. Just let that sink in for a second. To be perfectly clear, the potential return from here to there is astronomically higher than even his monster call on Bitcoin. He's basically shouting from the rooftops that Ethereum has way more room to run. And all of this leads to maybe his most mind-bending prediction of all. You've probably heard people in crypto talk about the flippening, right? It's this idea that one day Ethereum's total market value could actually surpass Bitcoin's. For years, that's just been a fantasy, a pipe dream. Well, Tom Lee is putting the odds of it actually happening at 50-50, a coin toss.
Okay, so let's bring this all home. We've looked at a totally new market dynamic. We've looked at a new kind of company structure designed to take advantage of it. We've even looked at the specific asset that's supposed to be the fuel. So what's the big takeaway here?
Well, it really just boils down to this simple 2-part play. Part 1, you take a company structure that's designed for stability and safety, that clean, debt-free balance sheet. Part 2, you combine it with an asset that Lee believes is just absolutely primed for explosive growth, and that asset is Ethereum. And that leaves us with one last giant question to chew on. The whole point of this strategy, right, is to capture those life-changing crypto returns while maybe, just maybe, dialing down some of that classic stomach-churning risk. So you really have to ask yourself, in a market that's famous for its wild, violent swings, is this debt-free model the real secret? Is this the key to not just surviving the chaos of crypto, but actually winning?